Oh man, today is a glorious day for various reasons. One, it's a happy Monday. Hopefully everyone had a great weekend and hopefully everyone is having a great Monday morning. It is 10:52 a.m. Eastern Standard Time. It is a glorious day in the stock market. It is a glorious day, especially if you have been taking advantage of this massive drawdown dip manipulation, whatever you really want to call it, that's been happening for the last several weeks, several months. If you even go back further, maybe you can say probably within the last year. But there's been a lot of short-term pain here in the market, especially around stocks like SoFi. Today's video is just going to be dedicated for SoFi. So if you are a SoFi brother or sister, you own some shares long-term. I'm a long-term SoFi investor holding massive amount of shares, especially for the future, because I really do believe the management team is setting this stock up to be a financial banking giant. And I say that very lightly because we're going to see as the years pretty much play out here, going into primarily 2030, past 2030, banks are going to have to transition to fintechs. Otherwise, they are going to be phased out. What do I mean by phased out? They're going to go bankrupt, or they're going to be bought out, or they're going to be pretty much just eaten up by fintechs out there. So stay tuned because I'm going to be going over very great information about SoFi coming on what it could potentially be at this week. We have a lot of bullish catalysts this week's as well, in my opinion. But firstly and foremost, I got to go ahead and take some morning water cheers. I keep things real on this YouTube channel because I'm a real person. I'm not an AI. I've been on YouTube for many years now. We really don't edit too much around here because, like I said, real talk is probably best talk. This YouTube channel is still relatively new, so if you enjoy my content, definitely smash the like button, entirely free. Subscribe for future videos. I put out episodes on this channel Monday through Friday. My main YouTube channel with 200,000 plus subscribers, my 18-year anniversary actually just happened on YouTube. It's a video game channel, NightmareRH, and my video game viewers do not want anything to do with the stock market. And I'll go ahead and say this. We're probably going to start getting really good articles around the stock market maybe in a month or so, because that's really what ends up happening. But by the time you see articles about the US stock market being this magical, wonderful place, the buy the dip opportunity has already came and gone. And that's how the market works. Keep it simple. Let's say 1 March, there was something really bad that caused the stock market to go down. Well, you're not going to see headlines about what caused the stock market to really go down until a couple weeks after the market has already been down, okay? Just like how when the market is very much recovering, you're not going to see articles being posted until potentially weeks, maybe even a month after the market has pretty much recovered. Okay, by then, the buy the dip opportunity has pretty much been bought. And this happens time in and time again. If you've been following me on this YouTube channel, you probably are aware that I'm doing a public profile challenge for motivation and education purposes. I'll be probably going over my public profile here probably in the later portion of today's video. I'm going to try to keep this video under 20 minutes. It's a challenge sometimes, and I'm not going to lie, it really is. But this is how you have to view the market. You have to do your own due diligence to make life-changing money, and it's not hard to do. I am very much dumb as a rock when it comes to mathematics, like, you know, like using a pen or a pencil, pen and paper or whatever. Give me some technology, and I can go ahead and tell you precisely how a company could be valued, where a company is going on a fundamental analysis basis for the future. And on the flip side, I'm very good with technical analysis, TA. So you got to do your due diligence, and you have to understand all this stuff. And you also got to understand when you as a retail shareholder investor like myself, we are being played into potentially selling out our positions, our great long-term positions, for practically nothing. And there's a pivotal shift right now happening with SoFi real time. I'm watching SoFi on a different monitor right now, just trending higher to 1750. I'll get to that, like I said, in a couple minutes here. But this Wednesday is going to be huge. I'm not going to be covering it live. I do want to start doing live streams on this YouTube channel. So definitely stay tuned for that in the future. But I'm actually going to be getting a haircut on this glorious Wednesday. So as I'm getting a haircut at 2 p.m., my barber has been on vacation. As I get a haircut, Jerome Powell, no, whoo, man. Whoa, yeah. I got to get that on my, this is what happens when you've been watching Jerome Powell for the last couple years. Kevin Walsh, our new Fed governor, is going to be coming out. I don't believe the Federal Reserve is going to cut interest rates. That is unrealistical. And I am a realist. I'm not an idealist. So what I mean by that is I have realistical goals. I based my data pretty much on realistical stuff. And as for the Fed Watch, I can go ahead and leave this link down below in the description of the video for today. Understand that these percent chances are based on algorithms. Yes, bots. Okay? If you're new to the market, this might be kind of a shell shock to you, but it is driven by algorithms that pretty much has a feel for how people are very much feeling. The betting markets, pretty much. And there is a 1.3% chance that we're going to be getting a rate cut. Do I think we're going to be getting a rate cut in 2 days? The answer is no. However, what I do believe is that Kevin Walsh is going to come out and he's going to say, hey, we are not going to be raising interest rates in the foreseeable future. So, right now the market is pricing in pretty much almost a 25% chance that we're going to be getting a rate hike in September. I believe that Kevin's going to come out and squash that. And then I believe he's going to come out and say, yeah, get rid of these fears. Get rid of rate hikes. There's no reason to be raising rates, especially oil is very much plummeting to the downside because, well, we got a peace deal over the weekend. The Strait of Hormuz, hopefully I pronounced that right, is fully reopened now, which means why would there be rate hikes? So the data that we got where it came in for inflation being very hot, you got to remember that is the previous month. So now that oil is very much below $85 and the Federal Reserve has stated that as long as oil is below $85, it's very much not going to be really a massive inflationary kind of thing for like data, okay? The Federal Reserve has also stated that as long as inflation is not above 5%, historically the Federal Reserve doesn't intervene. Believe it or not, a lot of companies out there, they want inflation to be a little bit elevated. Why? Think about it. Companies rely on what? They rely on EPS. They rely on spending. They rely on... So if you're in an environment where inflation is a little bit elevated, let's say above like 3%. Right now we're at like, I believe, what is it? 3.8, 3.9%. So if you have inflation a little bit elevated, companies, they're not gonna dislike that, okay? You got to be thinking about it like that. What matters is if you have descending earnings like 2022. I was in the market during 2022, been in the market 6+ years now, and I've stayed in the market the entire time. That is how you make life-changing money. You got to stay in the market during the hard times. You got to stay in the market during the best times. Playing this game of, I'm going to liquidate my profile, I'm going to come back here and there, it's playing with fire. There are people that I do know that have done that and have done fairly well, but you really should, if you're going to be if you're going to be invested in stocks for the long term, whether you are trading or whether you are investing, you got to be in the market continuously. You can't zone out the market because every piece of the market matters, especially through history. So if you completely ignore the market during 2022, you're probably going to say right now feels like 2022. It does not. Company earnings are going up. 2022 companies' earnings were going down and inflation was going up. Now inflation is going up and now companies' earnings are going up as well. So it's a different time period, significantly different time period, okay? However, the inflation going up is caused by oil. So below $85 per barrel, getting below 80 bucks, Anthony Noto has mentioned is extremely bullish, especially for interest-sensitive stocks like his own, SoFi. So therefore, yes, this is nothing more than just like massive bullishness across the board. Now, pretty much going to my stocks that I own here. Actually, let me go ahead and go over this. So like you said, once again, I'm doing a public profile challenge, looking to take this sum of money to 6 figures in the course of 17 months. The account challenge started 2 January this year, and it's been a battle, especially over 50K here, but we have shattered this now. AMD continuously to bring this account to all-time highs. I got people leaving snipping comments when I was buying AMD below 200 bucks on this YouTube channel publicly several months ago. Yeah, several months ago I was buying an AMD share here. Now people are willing to pay 500 bucks, 550 bucks for AMD because AMD is going a lot higher than 550 bucks. SoFi. Okay, so I talked about this. In order to bring this account to very much the next level of 60,000 plus, the evaluation shift around SoFi is going to very much happen. And it's also going to cause Robinhood to also soar too. I am a long time bull on Robinhood, but I'm short-term bearish. I think we're experiencing on Robinhood pretty much a fake out, and the reason being is because Bitcoin, crypto, has not bottomed yet. So until we get crypto very much bottoming, which a lot of people are saying is going to be at the end of this year, you may or may not see Robinhood recovering. But here's the crazy thing. Robinhood is a risk-on company. So if people are willing to take risk in the market, go more on margin, and this account is all cash, no margin, by the way. I'm not a margin trader, investor. I keep things basically pretty much simple. Cash, in my opinion, is king. Therefore, it's very harder to over leverage yourself, especially if you are just using cash. You can definitely overexpose yourself. I will say that. Does it bother me that AMD is 44% in this profile? No. I've talked about this before, and the reason being is because AMD is on a growth cycle, okay? There will be a time where I sell my AMD, and it's going to take the 44% obviously a lot lower. SoFi is going to be rock and rolling very shortly. This could be the SoFi rally. So obviously it's going to be eating away at AMD's massive position. But the CEO of Robinhood, Vad, the guy's an innovator. He also does not like seeing his stock price being low. He stated this before. He does care. And he does a lot with retail, and he also does a lot of podcasts as well on YouTube. Call me crazy, but maybe someday I'll get to really have a chat with him. Would love to. But the thing about it is that the guy's an innovator. He's like Mark Zuckerberg. So a lot of bulls are saying that Robinhood, is going to follow in suit with SoFi. When SoFi recovers, Robinhood is going to recover. I think it's more so going to be around crypto, but anyways, Go back 3 months to my videos when this profile was actually $33,000. My Robinhood position was actually down by friggin' close to 25%. Adobe, I spoke about them on my previous video. Adobe has a lot of internal noise. I really got to see what the new CEO is going to be doing, what the new CFO is going to be doing. But hey, I'm not perfect. I'm not God. And as a disciplined trader and also investor, you got to know when to really pull the cord. If Adobe dips below 30%, 35% losses for me, it's going to be that's going to be pretty much time to potentially really start selling some losses in allotments. Okay, the way I get out of stocks and the way I get in stocks are the same exact way. I nibble on in, I nibble on out. If I'm taking losses on a stock, what I do personally, I'm not a financial advisor. You do your own strategy out there. But what I personally do is I sell losses in allotments. So I'll sell 25% here, 10% there. It's a green day. Okay, let me sell another here. You sell in allotments. And you try to really sell on green days pretty much. Palantir, I see a great recovery coming. Meta, CapEx, that stock was down. Meta is up 5% today. PayPal, there's just, I mean, the company is growing 4% year over year. They're a cash flowing business. They just have a lot of internal noise. Realistically, the company needs to be bought. A lot of people are saying that. I honestly really wish that I bought more ServiceNow. I honestly wish that I friggin' went heavier into ServiceNow than I did Adobe. But hey, you're not always going to be right. But when you are right, like a win-win chicken dinner of AMD, which used to be an advanced money destroyer, it makes up. And as for SoFi, when you're right, oh yeah, you're definitely right. So I could very well sell all my losses on this account, and I could do something very risky as take all my loss of money and just throw it into SoFi. But that would be terrible risk management. There are people out there that would do that, and that goes a lot against the strategies. I did get asked that question, I think it was a couple weeks ago. Pretty much, why don't I just go ahead and just buy a handful of great stocks rather than pretty much going across the board? It's basically risk management 101. And like I said, I honestly thought AMD was going to take off running later this year rather than sooner. So it really goes to show that you can be wrong when it comes to a stock that is moving up higher sooner. And you can also be wrong on a stock that you thought would be a win-win chicken dinner. Hey, it is what it is. But I mean, seriously, who really knows? For all I know, Adobe very much could recover, maybe to like 260. At 260, honestly, I'm gonna be selling some shares probably if it does recover. And maybe if it can get to $300, if anything. Hey, you wanna know what? If I walk away with a little loss or a little bit of profit, it is what it is. But as for SoFi, going back to the main topic of today's video, I apologize. This video is basically a conglomeration of many stocks, but I think if you are watching me, you're probably in near the same stocks as me, whether it's really semis, AMD, Nvidia. I don't own any Nvidia right now. And by all means, I'm bullish on Nvidia, but I've had plenty exposure to Nvidia during 2023 and 24, and also during last year too. I really see the big move being in a stock like AMD. So SoFi, where can SoFi go to next? Well, on a technical analysis basis, because now we're going to be running on moving averages, the evaluation is going to change. Okay. Understand that SoFi was trading 2 times tangible book value. I thought that I had a screenshot up here. Apparently I did not, so bear with me here. I got to go ahead and find it. The CEO was in an interview, and he has stated this, not to mention various other people as well. So I'm not pulling this out of my bumhole. This is very much stated by the management team. The way you got to look at SoFi's evaluation is very much on tangible book value, but understand that we can get a fintech multiple. So what would it look like being a fintech multiple? That means that we are very much trading very higher on our multiple on tangible book value. So when you value a bank is valued based on tangible book value, which means you add up all the assets, you add up all the everything, right? Obviously SoFi, they're on a growth cycle, and pretty much for the last several weeks, several months, they've been trading at a 2-time multiple. It doesn't have to be perfect. You can be at 2.1, 2.2%, give or take. You can go, but the fact of the matter is that it's very close to being valued at a 2-time multiple, okay? So right now, we are experiencing a valuation shift. Why is that? Because oil is going down. Yes, this video is longer than 20 minutes. Oh well. Oil is going down, and we're probably not going to be getting interest rate hikes. If anything, the Fed is probably going to be very dovish now that there is a peace deal in the Middle East and the Strait of Hormuz is fully open, right? So SoFi is going to trend probably back to $25, which will give us a 3.5% multiple. How are we going to get to $35 to a very high fintech multiple, kind of a hybrid multiple? We basically pretty much get rate cuts back on the table, and SoFi adjusts their guidance. SoFi sold off after their earnings because pretty much their guidance was unadjusted. That's the reason why we had a sell-off. So come time beginning of August, as long as the Federal Reserve says, hey, we may have rate cuts back on the table for this year, or there's going to be no rate hikes, maybe SoFi can adjust their guidance. But for the time being, we're definitely going to see SoFi pushing very much back into this area before earnings. Before earnings, they were very much in the $18 range here. Then they sold off. We attempted to push higher. Why was this? Because we were potentially looking at a peace deal a couple weeks ago, beginning of June, and then a lot of stuff happened in the Middle East, and the market kind of sold off again. Now we're going to pretty much retest pretty much 18, 19 bucks. So if we can close above $17 today, that's extremely bullish, very, very bullish to close above 17 bucks. And if we continue on this trend, we could very much be heading back to the low 20s, 21, maybe 20 bucks. Maybe even we're going to head back to, call me crazy, but maybe we can head back to 20, 25 bucks, pretty much where we sold off earlier this year. It's going to really rely on government data. It's going to rely on pretty much the Fed being very dovish, no rate hikes, and ultimately it's just going to very much rely on the market doing a re-eval. Do I think it's going to end up happening? I do. I actually made a realistical video I think it was last week, talking about my price projection on SoFi at the end of this year. It's a realistical video. It's nothing pumpy. It's nothing crazy. I pretty much said SoFi on a bull case can be $35 by the end of this year. On a base case, it could be high 20s, or very, very high 20s, 28, maybe 30 bucks. On a bear case, maybe 23, 24, 25 bucks. That is a realistical price target, okay? It's not a pumper. It's not something unrealistical. You're talking essentially potentially about maybe 80, 90% of a move by the end of this year. Well, if you're a short-term trader and you're swing trading stocks, anything less than 6 months, I mean, hey, you're doing a short-term trade. if I was doing a short-term trade on SoFi, yeah, SoFi would be a trade for me. I'm doing a long-term investment on SoFi, so it's a little different. I'm playing this for the long game. But short term, yeah, your traders right now are probably very much getting into SoFi. Because there's going to be a lot of upside. Happy Monday once again, everyone. I did not mean to ramble on in this video, but a lot of good stuff for the market. And yeah, it's feeling like a SoFi rally is here. All right, later, everyone. See you tomorrow with a new video. Bye.